Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.
All right, so welcome to Mortgage Mom Radio. I am Debbie Marcoux. I am the Mortgage Mom, and today we are going to be talking about why application volumes have spiked. We're at 33.3% higher than where applications were at the end of the holidays, and so we're going to definitely get into that. Why is it something that you should be jumping on the bandwagon as well? So what exactly is going on? But I'm going to get to that here shortly. My text message is going to go out at 1 o'clock. So to remind everybody, if you would like to know when I go live, number one, you can subscribe to my channel. So subscribe to my channel right here on YouTube, and you will get notifications when I go live. But I don't know about you, but I've subscribed to many channels and I don't always get those notifications. I get them later. So if you'd like to join us live to be able to ask your questions and put them into the chat, then you want to get a text message from me. If you want to get a text message from me to let you know that I am live and a link to click on to bring you straight into the YouTube, then text the word live, LIVE, to 844-935-3634. That's 844-935-3634. Text the word live. Okay. So really quick, while we're waiting for that text message to get out for all of my friends and clients to be able to jump on and watchers, I do want to send out a heartfelt, I am so sorry. One of my very, very good friends, real estate partners, Vera Nelson, did lose her home in the Pacific Palisades fire. And so with that, I want to say that anybody that is out there and looking to purchase a home in California, in Southern California, number one, Vera is a fantastic real estate agent. But number two, let's try to help her. Let's try to get her business boosted. So while we're waiting for everybody to join, and I can see that my dad jumped on and said hi, we're going to go ahead and run a commercial for Vera so that you know who she is. And when that commercial is over, we'll get back to the show and we're going to start talking about those mortgage applications and why the volume is up. So stay tuned. We'll be right back.
I'm Vera Nelson, broker-owner of Hyde Realty. Hyde Realty is a boutique agency located in Southern California, dedicated to our clients. We cover all of Los Angeles, Orange, Riverside, San Bernardino, San Diego, Ventura, and Kern counties. Whether you're looking to purchase your first home or sell your last, my team and I are here to help you. With years of experience representing active service members and veterans, we have the tools to get your offer accepted. We work hand in hand with first-time buyers to help them achieve their goal of ownership. We represent the savviest of buyers and sellers, from investors to probate and multi-million-dollar transactions. The Hyde team is ready to help and serve you with the knowledge and experience you deserve. Please reach out today if you would like to discuss your needs and how we can serve you. Once again, I'm Vera, broker-owner of Hyde Realty, 626-298-3025. Vera at Hyde, Hythe, Realty, REALTY.com.
Okay, so welcome back to Mortgage Mom Radio. That was Vera Nelson. She is just the absolute sweetest and a very, very good real estate agent at that. So if you are looking to purchase a home or sell a home, please reach out to Vera. That's the best way that you can help her. She has just lost almost everything. And it would be a great support for her if you guys could give her the opportunity to help you. Okay, so let's get into this. I can see that Joe jumped on, and Joe Vera, and says hello, y'all. So Joe, thank you so much for joining today. And like I said right before we went to Vera's commercial, My dad jumped on. He said hi. So, Dad, thank you so much for always being my biggest supporter. But today we are talking about why mortgage applications have gone up by 33.3% since the holidays. And is this something that you should be jumping on the bandwagon and looking into yourself? So I did find an article. You guys know how I am with my articles. I always like to back up what I'm talking about with something that has been published so that you guys know that I am not giving you false information or just making things up. So I did find an article that you can look up yourself if you'd like. It's on Housing Wire. Housing Wire is really a fantastic website. They've got great articles that they publish, and it is all about everything that is going on in real estate. So Housing Wire. This one was just published today, and it was by Sarah Wolak, January the 15th. So if you go to Housing Wire, you can actually read the entire article. And I'm not going to read the whole article to you, but I'm going to kind of read the first couple of paragraphs to get us pushed into the right direction of why are these applications spiking right now, the actual application volume. So with that, it says, with an adjustment for the New Year's holiday, mortgage applications increased 33.3% from 1 week earlier, according to the Mortgage Bankers Association weekly mortgage application survey released today. This week's reading for the week ending January the 10th, 2025, is a stark difference from last week's applications, which reflected a seasonal lull following Christmas. So I do want to tell everybody that I've said it in previous shows that this is our slowest time of year. Things really do start to slow down pretty significantly right before Thanksgiving, and we stay pretty low all the way through the holidays, and usually into about mid-February, we'll start to see things start to pick up a bit. And then really as we approach March and, springtime and people starting to think, the kids are going to be out of school soon, that is really the big buying season. So typically this is very, very standard that would have a seasonal lull right now in mortgage application volume. While the market composite index increased over 33% on a seasonally adjusted basis, the index increased 52% on an unadjusted basis during the same time period. The refinance index, which increased 44% from the previous week, was 22% higher than the same week year over year. So again, what they're saying is refinance volume is up significantly. If you look at, get rid of the seasonal low, look at actually where were we at last year, 2024, to this year, this week, 2025, refinance volume is up 44%. Purchase applications were 2% lower and refinances were 22% higher compared to a year ago. Total applications were up 33.3%, the highest level in a month, as both purchase and refinance applications saw large percentage increases over the week. The share of refinance mortgage activity increased to 42.7% of total applications from last week's 40.8%. The adjustable rate mortgage share of activity increased to 5% of total applications. So that's all I'm going to do of that article. But again, if you want to read the entire article, go on over to Housing Wire. It is on their website and you can read it there. So let's talk about this. So purchase application down 2%. That's okay. 2% is not a big number. Very, very common, very, very seasonal for this time of year. Pretty standard. But refinance applications are up and they are up significantly. Why is that? Are interest rates coming down? No, they're not. We've actually seen over the last 5 weeks, we've seen a steady increase in interest rates, in mortgage interest rates. So interest rates are not actually coming down, which would be propelling more people to start doing refinances. What is actually taking place right now is, number one, somebody that has an adjustable rate mortgage. They might be at that year. Many of those adjustable rate mortgages were written for 5 or 7 years where that interest rate stays fixed and then it turns to an adjustable after the fact. Many of those interest rates were written between 2016, 17, 18, 19, 20, 21, right? Think about when interest rates were really coming down. They really started to, the adjustable rates really started to go to pen to paper. Really about 2018 is when we saw interest rates start to come down and adjustable rates were even lower. So we're starting to see some of those adjustable rates that are now due. The loan itself is not due. They could keep the loan that they have, but it would go to an adjustable rate. So that interest rate will fluctuate and that interest rate will go up, and it would probably be better to just lock in a lower long-term interest rate. So that is number one reason why we are starting to see application volume up. Number two reason that we're seeing application volume up is that people are just maxed out. So many of you have been holding on, waiting for interest rates to come down, very, very concerned about losing that low interest rate that you have on your mortgage already. You don't want to give that up. You don't want to refinance your house to take cash out to get your debts paid. And so you've been waiting for as long as you possibly can wait for these interest rates to come down. Well, they've come down, but they haven't really come down, right? They haven't come down to the levels that many of you currently have an interest rate locked in on your current mortgage. So nobody can wait anymore, right? There's 44% increase in mortgage applications because you just can't wait. You've got the debt, you're maxed out on the credit cards. You might have previously taken a home equity line of credit that you've already utilized. Credit cards are now maxed out again. And what are the opportunities that are available? So I can tell you that any refinance that I am working on right now, that I have started to work with the clients through their loan application, we are seeing that we are giving the person savings on a monthly basis. Now, that's not going to be for everybody. And there may be many of you that haven't taken a home equity line of credit yet. So we are going to go through the entire process of what are the debts? What are the interest rates? What do you owe? How much do you have on your first? We are going to go through all of the information to try to figure out and determine what is your very, very best step forward. Home equity lines of credit, if you don't already have one, are a fantastic option. That could be something that would make sense for you rather than getting rid of that really low interest rate that you have on your current first mortgage. However, many of you have already taken that home equity line of credit, or when we actually run the numbers, it turns out that it is still better to do a refinance. So have interest rates come down? Let's talk about that for a second. Yes, they have. Our highest peak, I would say, was in 2023. And we had hit about 8 to almost 8.5% in a 30-year mortgage. We are not there right now. We are actually lower than that. So when I say that interest rates have steadily inclined over the last 5 weeks, we actually hit a really nice low, the very best interest rates that we had seen in well over 2 years, possibly 3, if I really think back, was about October of last year, 2024, October of 2024. Best interest rates we had seen in 2 or 3 years. And then since that time, we have steadily kind of started to creep back up again. Right now, the average interest rate for a conventional 30-year fixed rate loan is right around 7%. For an FHA or for a VA, a government loan, we are in the 6s. So we are not anywhere near as high as where we were. But we are definitely not where people want to be. They want to be in, the 5s and in the 4s, and they'd love to be back into the 3s, right? Some of you even have a loan secured for 2%. So it is very, very important that we're talking to you about how much do you owe on the house? How much debt do you have? What is your current interest rate? Do you have a home equity line of credit right now that you've already got utilized and you already owe? Do you not have a home equity line of credit yet? But people are maxed out. They need to do something. They have a lot of equity in their home. So they are equity rich, cash poor. It is just unfortunately the scenario that the majority of Americans are in today. And people just can't wait any longer. They have gone as long as they can possibly go, and they just can't wait any longer. And they need to do something. They need to get their debt under control. If you are one of those people that have that debt, if you're thinking to yourself, and I want you to think very clearly right now, if you are thinking to yourself, my interest rate is too low on my mortgage, it doesn't make sense, there's no way I could refinance and save money, that might be the case, but that might not be the case. And you truly don't know unless you actually talk with a professional. So I want to throw that out there to you, that it is very, very important that you do pick up the phone and you give us a call, or you go to my website and you send me a message through the Contact Us button, or you put in a website inquiry, put in your details, what you've got going on, and let us show you what it might look like, because you really might be surprised that there is something that we could do to help you. So for example, right now I've got one of the refinances that I'm doing is for a veteran. She got herself into debt. She bought the house. She made a move. She decided to move from California to Nevada. And, you know, just between the costs of moving, she was able to get a bigger home. She was so excited. She got a home instead of a condo, 4-bedroom house, right? But with that 4-bedroom house came, you know, more maintenance, and came more furniture that was needed to fill the house, and just, you know, different things that happened that got her to the point where she maxed out those credit cards. So she's got a great interest rate on her current mortgage, but when we looked at all of the debts that she has in place, it's actually going to still end up saving her $400 a month to do the refinance, to do the cash out, pay all of the debt off, take a higher interest rate than what she's got currently. And then we wait for the market to adjust. And when the market does adjust and the interest rates do come down further, then we refinance it into that lower interest rate. And that $400 savings could turn into $800 savings, could turn into $1,000 savings. So it is very, very possible right now to do a refinance and to save and to get debt paid off and to make your cash flow better. And it might not be possible, but you just don't know until you actually reach out and you give us the opportunity to run those numbers for you. So once again, please give us a call. Please talk to us. Don't just convince yourself that you can't do it, that it's not possible, that there's no opportunity for you, that you're just going to have to try to grin and bear it and make the minimum payments on those credit cards. Please don't do that. Please at least reach out and give us the opportunity to try to help you. So once again, what do? You call us. It's 844-935-3634. That's 844-WE-LEND-FOR-YOU. WELEND and the number 4. Or you go to my website, go to mortgagemomradio.com. There is a Contact Us button on the website. You can send me an email. I get it. The Mortgage Mom. I reply. You're talking with me directly. Or you can go through, one of the website inquiries. So it'll ask you, do you want to refinance? What is the interest rates today? How much do you owe? And it'll give me all of your detailed data. And then I reach back out to you, and then we talk about where you're at and what you're trying to achieve. And then we talk about rates and payments. So please remember that. You can go to the website, mortgagemomradio.com, or you can give me a call. So one thing I do want to tell you guys is, again, I've mentioned this on previous shows, but I want to bring it up again. I've got 2 different text messages, right? We started this show, I want to say 7 or 8 years ago. I mean, I've been on for a while now. And we started it with text the word mom to my phone number. And many, many people opted in. I've got over 4,000 subscribers to that mom number. But that was 7 or 8 years ago. So over 7 or 8 years, many of my listeners have listened. I've educated. They've purchased. They're in their home. And they don't need to jump on and join the show anymore. And then I've got newer people that have started to listen. And so what I did is I created a new text word, which is live, Live, live. So if you are opted into the mom text message, I'm only going to send one more message, and I'm probably going to do that in about 2 or 3 weeks from today. So I'm only going to send one more message to that number, and then I'm going to unsubscribe everybody that has ever subscribed to that number. I don't want to be bothering 4,100 people that don't care, that don't want to jump on, that don't want to watch the show. Also that, it costs me a good amount of money to send those text messages out. It's per text message that I send. So to send it out to 4,100 people that aren't interested just doesn't make sense either. So if you do like the show, you want to keep getting the education, you want to know what is going on in the mortgage and real estate world, make sure that you do text the word live. That will opt you in to that new number, and you will still then continue to get the weekly reminders from me every week. So text the word live to 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. So again, make sure that you guys do text into live. So even if you got a text message today, I did actually send the text out to the live group that is already opted into that number. So those of you that got a text message today, you do not have to worry about texting again. But if you only found me live because it popped up on your YouTube because you've subscribed to my channel, but you used to get a text message and you don't get a text message anymore, that is why I am actually winding down that mom number, and I am not sending out those text messages weekly. And like I said, in I think it's 2 more weeks from today, then I will send one more out to remind everybody to opt into live, and then we will be retiring that number and unsubscribing anybody that was on that number previously. So I wanted to bring that up because I want to make sure that you guys do continue to get the information that you need. I am going to run a very, very quick commercial. Once again, you guys watched it once before. I just want to say my heart goes out to all of the fire victims that have been affected by these California wildfires. So many people that we have talked to have lost their homes, which is just absolutely tragic. Very, very close and, personal real estate partner that I work with very, very often. I have been working with her for many, many years now. An absolutely fabulous real estate agent with an amazing amount of knowledge. She is the broker owner of Hythe Realty, Vera Nelson. She lost her home in the fire, in the Pacific Palisades fire. So I would absolutely love it if you are looking for a home in Southern California. Please give Vera a chance. Reach out to her. Number one, you'll love her. She is sweet as can be, but she is knowledgeable. She is fierce. I mean, you talk about negotiating for people. She is absolutely fierce when it comes to representing her clients, her sellers, and her buyers. She absolutely loves VAs. She works with so many veterans. That is like one of the biggest pieces of her business. So she is just an all-around, absolutely wonderful person. So I'm going to run her commercial again to try to get her name out there and push her information and content. And when we get back, we will take any questions that come in. I can see that one came in. It says actual number again, please. It is 844-935-3634. So that's 844-935-3634. Text the word live if you'd like to get that weekly reminder that we went live with the link to join. That is the same phone number that you will use to call my office if you would like to talk with me or one of the loan officers on my team. And you guys can go to the website, go to mortgagemomradio.com if you want to contact me through email or put in an inquiry to find out about a refinance or a purchase. So let's jump into Vera. She's got a 60-second commercial. I'll be back. I'll answer questions. We'll wrap up the refinance and whether you should be reaching out today. And stay tuned. Here we go.
I'm Vera Nelson, broker-owner of Hythe Realty. Hythe Realty is a boutique agency located in Southern California, dedicated to our clients. We cover all of Los Angeles, Orange, Riverside, San Bernardino, San Diego, Ventura, and Kern counties. Whether you're looking to purchase your first home or sell your last, my team and I are here to help you. With years of experience representing active service members and veterans, we have the tools to get your offer accepted. We work hand in hand with first-time buyers to help them achieve their goal of ownership. We represent the savviest of buyers and sellers, from investors to probate and multi-million-dollar transactions. The Hives team is ready to help and serve you with the knowledge and experience you deserve. Please reach out today if you would like to discuss your needs and how we can serve you. Once again, I'm Vera, broker-owner of Hyde Realty, 626-298-3025. Vera at Hyde, Hythe, Realty, REALTY.com.
Okay, so welcome back to Mortgage Mom Radio. I'm Debbie Marcoux, and we are going to wrap up the show. So the short of it today is mortgage applications are up 33%. 42% of those applications are actually for people that are applying for refinances. The majority of those refinances are for cash out. Now, one thing I do want to bring up that I did not talk about before, and I think this is really important. So when somebody is thinking about, well, should I refinance today while interest rates are high? So keep this in mind. When you do a cash out refinance, the interest rate that you are given is higher than if you do a refinance to just change your rate. So if you are doing a rate and term refinance, you are literally just looking for new terms and a lower interest rate. You get a better interest rate than if you are trying to cash out. If you cash out, there's additional risk added to that actual pricing, and the interest rate is higher. So if you are going to do a cash out and you need to cash out and you can save yourself on your monthly cash flow, do that refinance now while the interest rates are higher. Why do I say that? Because when the interest rates do come down and you don't need cash out, you have now already taken care of what you needed to take care of. You already took the higher interest rate to get the cash you needed. You paid all the debts off. You got yourself all caught up. You got yourself in a little bit better position monthly, and your credit score's gone through the roof. Now, all of a sudden, 6 months from now, interest rates come down and it's worth it to do a refinance. Guess what? You are now a rate and term refinance. So not only have interest rates come down further, but you don't have that added price hike of the cash out that you are going to be able to take advantage of an even better interest rate at that point in time. So if you need the cash, if you're struggling, if you need to get yourself under control, you need to get the debts paid off, please don't wait. Please don't assume that it can't be done. Please don't assume that you're just stuck because your current mortgage rate on your current mortgage is lower than what you could get today. It depends on what you owe. It depends on who you owe it to. It depends on how much those payments are. Depends on what those interest rates are that you're paying. There is a very good chance that even at a higher interest rate on that mortgage, that you are going to end up into a better financial situation, a better monthly flow out of your pocket every month until rates come down further, and then we can save you even more. If you have not taken a home equity line of credit yet, home equity lines might be the best option for you. We're going to look at all avenues before we tell you which direction that you should go in. And by the way, I don't tell you what direction that you should go in. I give you suggestion. I show you the numbers on all options. I explain why I would do something in particular, but you are the person that's making the decision. You are the one that makes the choice of how to proceed and how to move forward. So we're going to give you those details, and you're going to make the decision that works best for you and for your family. Linda got on and she says, hello, happy Wednesday. So Linda, thanks so much for joining. Love seeing you there. Again, I want to remind everybody, you guys, if you've got questions, please put them in the feed. This is an open conversation show. I want to make sure that you're all getting the information that you need to have. So please feel free to do that. The other thing that I do want to bring up really quick is that many of you, this is something that you may not be thinking of. So many of you may not have taken a home equity line of credit yet. So maybe that is your best option. We run the numbers. We let you know if it is or if it isn't, or if an actual refinance is the better option for you right now. But many of you, what you have done is you've charged up the credit cards, and then you've taken a personal loan. Then that personal loan paid off all the credit cards. So now you've got a big number. You've got 15, 20, 30, 40, many of you 50,000 in a personal loan. with a very nice monthly payment. But then you went out and you used all those credit cards again. And those credit card balances are now back to $20, $30, $40, $50,000, some of you more. So now between all of that and the interest rates that you're paying on a personal loan and an interest rate that you're paying on those credit cards, when we start looking at combining that with the mortgage, there's a very good opportunity that the cash flow is going to be better. The interest that you'd pay monthly is going to be better. It may not be a significant change. It might be like my VA client that I mentioned earlier in the show. It might be $400 a month that you save. It might be $200 a month. It might be more. But you're saving every month. You're getting it all paid off. You're getting your credit score back intact, and you've done the cash out. You've done what you needed to do. You're going to lock the credit cards in a safe that you can't get to because you need to be very vigilant in not spending that money again. But you are going to wait for those rates to come down, and then we are going to jump on it, and we are going to take advantage of lowering that rate even further and moving those savings of $200, $400, $500, moving those savings down again, another $200 or another $400 or another $600. That is what the goal is. And that is why application volume is up for these refinance. That is why people are jumping into it now. They can't wait any longer. They're tapped out. They need to do something. They need to get credit under control. They need to get cash flow just a little bit better. And we know interest rates are going to come down. We know that it's not far off, that it's going to happen. So get it under control, do it now, and then be able to take advantage again down the road. Linda did say Debbie Ann Mortgage Mom is the best. So thank you, Linda. So appreciate that. Linda actually did work with our team. She worked directly with Heather, and Heather is awesome and amazing as well. We're moms, guys. We're here to guide you guys, to help you guys. Who do you call when you need help? You call your mom. And that's the philosophy that we take. We look at all of you as family. Once you have been our client, you are our client for life. You are our family. And we want to make sure that we're guiding you correctly. We do not want to put you into a bad situation. We do not want you to do something that you shouldn't do. We do not want you to do anything that doesn't make sense. So thank you, Linda. That was very, very nice testimony. I appreciate it. Michelle says, doesn't having a line of equity put you in more debt to the lender's eyes? So actually, having a line of credit is better than having credit card debt. And so that is what we are talking about today, is getting your debts paid, right? So having a line of credit is better than the credit card debt. Now, if you don't have anything to pay off and you open a line of credit and you owe nothing on that line of credit, it does not look really any different on your credit report than what a credit card would look like, that you owe zero balance on. So it's actually very good for your credit score. But if you do use that line of credit, then yes, you're going to owe more, as far as balances owed, but it's not going to be any more than the balances owed that you already have on the outstanding debt that we'd be using the home equity line to pay off. Linda says, we did this and my credit rating is up 60 points. Linda, I love to hear that. I so love to hear that. And now all we need to do is have those interest rates come down so that we can take that balance that you've got and we can refinance you at an even better interest rate and an even lower monthly payment. So keep jumping on the show and make sure you're keeping in touch with Heather. You guys need to be fast, close friends right now. Heather says, hi, Linda. And I absolutely love working with Linda. That was Heather. So yeah, you guys, again, this is an open show. It's open communication. Talk to each other in the feed. Ask me questions like Michelle did. I am more than happy to help in any way that I can. But with that, you guys, I am going to turn down the show for the day. I will be back next week, every single Wednesday. Once again, a reminder, if you have not opted in to get a text message from me, which means that you did not get the text message today. So if you did not get a text message today, that means that number one, you opted into my mom text number. I need you to opt into my live text number to continue getting show reminders moving forward. So you're going to text the word live to 844-935-3634. That's 844 We Lend for You, WELEND LEND and the number 4. Text the word live. The mom text link is going to be, everybody that is on that will be unsubscribed in 2 weeks from today. So the only people that will be getting messages are people that are interested in jumping on the show every week, or if I always give you guys an explanation of what I'm talking about. So if the subject of the day is interesting, you click on the link and you join the show. So if you want to make sure you continue to get those, make sure that you opt into the live list. But if you got a text today, you are good to go, because I only sent out that message to the people that have actually subscribed to live. Michelle says, please answer my question first. Yes, Michelle, I'm not going anywhere. You jumped in while I was in my spiel. She says, for home improvements, should I use my cash to pay for them or using a line of credit? How long does it take to get it? So that's a great question. So number one, we've got lines of credit that we can get done very, very quickly, 5 to 7 business days, automated appraisal, very easy income qualifying. You connect your bank accounts. They look at the deposits that go in on a monthly basis. And that is how they actually do the qualifications. If you are self-employed or you've got a little bit, more difficult income scenario, then we've got other products that we can put you into. Those are a normal transaction, like a regular refinance, still a home equity line of credit or a home equity loan, whichever makes more sense for that client. And those do take about 30 days, start to finish, full appraisal. Not automated, full income. We're going to get either bank statements to verify income, or we're going to get tax returns to verify income, whatever it is that might be working for your file. But we have them that go very, very quick and very, very simple and very, very easy. And as far as, should you take a line of credit to do the home improvement, or should you use your cash? That is a very, very personal decision. Many, many people feel that cash is king, and they do not want to spend their cash, and they would rather put the debt against the asset that the money is going towards. So you may be a believer in taking the line of credit, doing the home improvements. The line of credit is paying for the improvements that it is against that asset of that home. You may be, the person that does not like to have debt, would rather use your cash. You don't want to take on additional debt. You can't afford additional debt. So paying cash would be the best policy for you. Everybody's got a different reason. I'm not going to tell you that one reason is better than another. For your personal situation, one might be the right decision. And for somebody else's personal situation, the other might be the right decision. Somebody may not have the cash, that they don't have an option, but to take a line of credit to do the home improvement, or to do a cash out refinance to do the home improvement. Somebody else might have the cash and unwilling to spend it and would rather put it on a line. Somebody else might take the line and use their cash because they want to owe nothing on the line. They don't want to make a payment. They'd rather spend their cash, but they have the line of credit as a backup, kind of a savings plan, if you may, or an emergency fund. So if they spend the cash on the home improvement and then all of a sudden something happens, they've got the equity line to be able to tap into for the cash that they need, that they just spent. So everybody has a different reason for whether one way or another way is the best way. Obviously, the less that you owe to all of your creditors, the better. But that doesn't mean that, that's what you feel is the best way to move forward. And then she says, line of credit charges interest rate. I pay off credit cards, so no interest. So yeah, so I think I know what she's trying to say. Your credit cards are going to have interest rates that are going to exceed, for the most part, the interest rate that would be on a line of credit. The majority of credit cards that we're seeing right now that clients are calling us have interest rates that are starting at about 19% on the low. And we're seeing them as high as in the 30s, right? So a line of credit is going to be somewhere between probably 9 and 12.5%, depending on your credit score, how much equity that you have in the property, how much that you're actually looking to take out. So the size of the line, your credit score, and the amount of equity available in your home will determine what the interest rate is that you get. But lines of credit right now are somewhere between 9 and 12.5%. That's kind of been the average. And again, that is far, far better than what you might have on a credit card. but not as good as what you'd get if you were to do a refinance. But depending on how much that you need, maybe a better option to have that line of credit and keep that low rate that you have today. And if you need a good amount of money, very good chance it might make sense to just blend it all together. So we're going to do those calculations with each person individually to figure out what your very best options are. So I'm going to give this one more minute. Okay, Michelle asks one more question, and then I am going to cut it for the day. And Michelle, you're welcome to call me. You're welcome to text me, ask away as many questions as you want. I will keep answering them for you. She says, can I add to the line of credit as it depletes without reapplying or applying for another new one? So yes, so lines of credit work very similar to a credit card. They give you a line of credit. There is a dollar amount that you have open and available to use. You can use it all day one. You can choose not to use any of it. You can use it, pay it back, use it, pay it back, use it, pay it back. They're usually open for a draw period, which means that you can use it, pay it back, use it, pay it back, use it, pay it back. For 10 years. After 10 years, it becomes completely fully repayable, and you're not drawing from it any longer. That is the majority of home equity lines of credit. Every company and every bank and every home equity line that is out there has a little bit different terms. So that's kind of on a general basis. What we typically see is that you have that draw open and available for 10 years to use it, pay it back, use it, pay it back. So that's it, you guys. I'm going to wrap it up. I'll be back again next week, every Wednesday at 1:00 Pacific time. I am on here and talking about something new, and get those applications in, guys, for sure. Get it done. If you are in debt, if you are hurting, if you are struggling, we're going to look at what the best options are for you. Should you do a home equity line of credit? Should we be consolidating and just get you one whole new loan? Get it done. Get yourself out of pain. Get your cash flow a little bit better. Low rates are around the corner. We'll refinance it again down the road when those rates do come down, and we'll get you even more savings again and again and again as those interest rates come down over time. So I hope you loved it. Go to the website, mortgagemomradio.com. Give me a call, 844-935-3634, and opt yourself in to get the text message. Text LIVE, LIVE, to 844-935-3634. Hope you guys all have a fabulous day. Talk to you later. Bye-bye.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.